Welcome to the Transparent FX channel. What we will be doing in today's video is performing a live swing trading analysis in the market. So taking a pair, checking what we have on it from a technical and order flow perspective. And by the end of the video, you will see exactly which kind of swing trading opportunity you can be looking for right now in the market on the pair. And obviously this will be a very educational experience because you will understand exactly which are the key concepts that you have to apply when you're actually analyzing the market. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms every single day. So I really suggest you subscribe and I will see you in the video. Okay, so let's make a full breakdown of the situation that currently we have on Euro JPY. Now, what I want to speak specifically about this pair because at the moment it is very interesting for a potential trading opportunity, as you will see during the video. So that is why I want to speak about it, and it's also very educational considering the situation that currently we have with the Japanese economy. In fact, we have just reached a record 27.8% decline in the GDP, which is one of the biggest declines that we have ever seen. So definitely it will be interesting to see how this will impact the market. So let's make a full analysis both from a technical and obviously we will be checking the order flow to see what the biggest banks and institutions are doing on the JPY and on the Euro. And by the end of the video, you will know exactly what kind of opportunity we have to be looking for on the pair. And also you will receive a lot of free education during the analysis. So I really suggest that you watch it till the end. Now let's start our analysis from the monthly time frame. So monthly, weekly and daily for direction and order flow, obviously. And the best time frame for entry is the 4 hours. Let's start the analysis. Now here in the monthly, what we can see is that clearly the market has just created a very good double bottom. In fact, from here, the market had started all this move to the upside. Then the market went to retest this level here, rejected it aggressively to the upside and started this very strong impulse to the upside. Now, if you're asking yourself why this last monthly candle is so bullish, because you have the previous candle, which is the candle that you expect the next one to fill in the wick. When you see a candle that has this shape, okay, it is green, but it works also for a bearish candle. But if you have a green candle that has a wick that is more than half of the body, you expect the next candle to fill in the wick. This is a pattern that you will see over and over and over again in the market, and it works very well. Why? Because this wick on lower time frames will simply be an impulse and a correction. So you expect the continuation to the upside. That is the reason for which you expect the next candle to actually fill in the wick. Now, going down on the weekly time frame, what we can see. Now, from a weekly perspective, we can see that exactly as we have already said, the wick that we had on the monthly is exactly this retracement here. And after the retracement, you expect the continuation to the upside, which is exactly what the market did. Specifically, if you want informations on this retracement, what do you have to do? You have to take your Fibonacci from the low to the high of the impulse. And by doing it, you can see that the market tested first exactly the 50% retracement and then the 0.382. Now, this is not something that the market did by mistake. This is something that the market does over and over again. If you have an impulse in the market, okay, and you want to measure the retracement, what do you have to do? You have to take your Fibonacci from the low to the high of the impulse. And one of the best ways to understand if the market wants to continue to the upside after the retracement is if the market starts hitting the Fibonacci levels one by one. So for example, first rejecting the 0.618, then rejecting the 50%, and then rejecting the 0.382. In this case, the market stopped directly on the 50, so the steps are 50, and the next step is the 0.382, which is exactly what the market did. So it's not by mistake. And after the market tested the 50 and 0.382 Fibonacci's taken on the impulse, we definitely expected the market to give us this move to the upside, And we had also made a previous analysis on this pair when the market was at this level, expecting this move to the upside. And I will link that previous analysis in the description so you can go and check it out. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. And if we go down on the daily, what do we see? Now on the daily time frame, what did we say in that previous analysis? We said after this impulse, we wanted to see a correction to retest this previous resistance, now turn support, before they move to the upside, which is exactly what the market did. And currently, what is the situation as we are speaking, and where is the opportunity as we are speaking? Now on the weekly, what we can see? We can see that in all this move to the upside, so from this low to this high, there is one candle which is not related to the move, which is exactly this red candle. And why is this red candle very important? Because this is a strong structure support area from a weekly perspective. So on the weekly, we have strong support at this area that we expect the market to reject to the upside. And if we go down on the daily, we can see that also on the daily, we have a bullish pattern. Why do we have a bullish pattern? Because on the daily, we can clearly see that the market has created this impulse and correction. And this impulse and correction is currently testing exactly the previous resistance, which is now turned support. And what we can also see is that inside of this area, we will have the confluence of the Fibonacci's taken on this daily impulse. Because if we want informations on the retracement here on the daily, we have to take our Fibonacci on the daily impulse. And from this area, we expect the market to give us a nice move to the upside. Now, before we go and see what we have from a COT perspective, it's very important to understand the situation that currently we have from a fundamental point of view. Because such a big decline in the economy of Japan, which was going on already before the actually came in the market, which by the way, I probably shouldn't have said that because I know that the YouTube algorithm kind of blocks your video. At least it doesn't give you enough reach. So I will probably beep that. And as I was saying, this is funny. So as I was saying, we had the impulse, we have the correction to the previous resistance, now turn support. And from this level, we expect the continuation to the upside. But as I was saying, from a fundamental perspective, since everybody, now that they know that fundamental data, probably they will start shorting the JPY, it could happen that actually the market goes to the opposite direction, because very, very often in the market, probably you already heard this, there is a saying that says, buy the rumors and sell the actual fact. And that is exactly what we could see here in the market. So seeing when now the news has actually been shown to everyone that the market will actually not show weakness of the JPY, but actually show strength, and then in the long term actually show weakness, just to hunt all the stop losses of people that are now shorting the JPY, because clearly we want to see more JPY weakness. But we could see some short-term strength just as a manipulation before the actual weakness. So just something I wanted to speak about from a fundamental perspective. Now let's go and see what we have from a COT point of view. So what the biggest banks and institutions are doing in the market. Now from a euro perspective, we can see that the longs just reached 266k. So a massive amount of longs getting added in the market on the euro, going from 147k to 266k. And if we look at the net positions, we went from a negative minus 114k net positions to now having almost 200k net positions. So we went from having way more shorts than longs from an institutional perspective on the euro with 271k shorts and 157k longs to having way more longs than shorts with 266k longs and 66k shorts. So clearly massive shift to the positive side, so the market can easily create another impulse to the upside and complete this impulse correction and impulse pattern to the upside. It can easily complete it. And if we go and see what we have from a JPY perspective, we can see that clearly 3.9k long positions have been already closed on the JPY from an institutional perspective, and 500 shorts have been added. So strong euro, weak JPY, we definitely expect this move to the upside. The only negative confluence factor is the fact that we could see buy the rumors, sell the actual fact, a thing come in the market, which obviously in this case is the opposite. So we could see some GPY strength in the short term just as a manipulation. But as in general, okay, trading is not predictive, trading is reactive. So what we will be doing with students, monthly, weekly, and daily are the best time frames for the direction of the market combined with the COT data, but the best time frame for entry is the 4 hours. And on the 4 hours, clearly at the moment, everything is still bearish and the market can easily continue to the downside. However, things might change in the future. And that is exactly what we will be waiting for with students. So inside of this area with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to shift from a bearish to a bullish market. And as soon as the market will shift from a bearish to a bullish market and provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, you get a new daily market breakdown every day showing you exactly how to apply these strategies with entry, stop, and take profit, as well as having me personally answering every question that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. You'll find it linked in description, and I will see you in.